Potentially, now listen to this, potentially, people, this mechanism can boost the stock markets, but the economy will suffer faster. The law of diminishing returns applies here. To keep the stock market propped up, the mechanism of artificially suppressed rates and therefore currency purchasing power losses will require extraordinary, can you see that? Extraordinary measures. The law of diminishing returns applies here. That's what I wrote. To continue to push cash into risk assets, stocks, or the stock markets as a whole, in the current environment will require a sharp upward move in debt expansion. Debt expansion in the form of currency issuance, kind of like a stimmy check. Those $5,000 checks they're talking about you're getting here. It's an amazing thing, man. We're not clawing back any cash yet from the apparent, or what they're telling us, fraud and misallocation of funds that has gone on. I know this has gone on. We all know that. We have yet to claw back a single dollar. We have not seen, again, a single person being pointed at. This is the one, or this is the group of people who are responsible for it. Interesting phenomenon. I understand that this takes time for those of you that this may trigger you. I'm not looking to trigger you. But again, no clawbacks, no accountability so far whatsoever, but you may get a $5,000 check. But that's okay. All right. What would you expect in this kind of an environment? People can't survive. And again, just funneling out, thousands of dollars. Where's this cash come from? Since we haven't clawed back any funds, I mean, there's talk about this $5,000 check from Doge. Where does that cash come from? We don't have it. We're absolutely destitute. We are the most indebted nation in the history of the world. Comes right out of the Federal Reserve. And of course, will be immediately added to the national debt. But you can't know that either. But this is the way politics works. It's incredible thinking. Anyway, to continue to push cash into the risk assets in the current environment will require a sharp upward move in debt expansion. Debt expansion in the form of currency issuance, which is also massively purchasing power negative and therefore inflationary. Are we on the same page?